Hey, good evening, guys. Ken at Taurus Capital, nightly strategy podcast for March 20th, 2024. So we completed our book club sessions for book one, Foundational Trading. And we have one more session left in which I'll be commenting on any final Q&As that are sent to me, but for all intents and purposes, we've completed the review of the book in detail with all of the sessions recorded, with Cornell note sheets, and a workshop built that has a lot of extra lessons that were based on questions and issues that were raised during the course. So I think that's a nice standalone home study course about 15 hours of recorded material directly related to the book, and probably another 30 to 50 hours of additional material. So I'll be offering that for sale at a discounted price to subscribers and then to the world. But it does a nice job of prepping people for the foundations course, in my opinion. It gives you a really good top level look at that book. One of the things that we talked about was just a review of the course structure for the OWL group guys. It's a bunch of us that are working together. And the courses that I offer, these are the technical trading courses here. The foundations course, which is really 4 courses in one. There's a psychology 1 and a psychology 2. This one is principles. And this one is case studies, in which you get put in a position and you have to psych your way out of it, so to speak. There's a course on the 37 strategies, which is really 43 big ideas that characterize our approach to the world. And then there's the foundations course itself, the boot camp, which now has about 75 lessons that contains all of our core competencies. There are separate standalone courses for core trading, long-term trading, mechanical and structured swing trading, and then focused on several different day trading systems, and then an advanced hybrid course, which we put together during the COVID, that kind of integrates core and swing and day, and which you really see reflected in the way that I do hybrid swing. Mostly the hybrid is found between swing and day because you get a lot of decisions, but you get a nice synergy between core and swing as well. And that's good for the long-term posture. The other courses that I offer, my capstone coaching program, I think, is the using story science and the Fletcher treatment to raise creativity for trading. That's a 30-week course with weekly check-ins, and it is transformational. There's also what I would call the trader's mind, and this is a series of mini courses that are in the 101 series, like leadership, time management, systems thinking, team building, stress management, meditation. These are all listed on tortoisecapital.net. And these are like, they're like $49 courses that really constitute the managerial skills that you need to be a disciplined trader and in charge of teams. So tortoisecapital.net has a listing of those. In addition, I've started this year with small group weekly coaching. We're getting ready to start cohort 2 in the second week of April. And that's a set of 52 weekly check-ins for accountability and individual research, which culminates in a personal project that gets briefed during the annual research course. So it gives you a goal to shoot for. I also am thinking about this doing individual, like one-on-one coaching. It's not weekly, but it's, you buy a booklet at 10 sessions, and then when you need them, we do them. I'm going to start that with a couple guys in April. Of course, there's the book club that we just completed. Now, these here are really practical courses. I consider the bar by bar course to be an outstanding accompaniment for the foundations, for the swing, and for the day, because this is practical training bar by bar on well over 100 case studies that were conducted live and recently. And I think that's a good way to think about how to do dynamic trade framing. The annual research course includes about 14 years of archives and all of the most recent research presentations from 2023. Just an amazing resource. You pay, if you participate in that, like if you're doing the small group coaching or individual coaching and you produce research, then you get it. If you want to just sort of leverage the research, then we have a fee for that. And then I have a series of 10 years of live trading workshop videos. When we were running workshops here in Kansas City, we recorded all those live trading sessions and necked them down into some powerful trading lessons. I'm reformatting those to make it a little easier and accessible, but that's going to be a pretty good resource. You can see us live and talking about the trades and framing them as we go, and the principles are kind of timeless, and the lessons are still solid. And those things right there, really, when they all get cleaned up, that's where the core and the swing and the day trading workshops come from, is the ideas get traded live in those sessions. And then the lessons learned from there updates those courses. So it's a practical approach. I would also say my brother's, I think he's completed the sniper training for 3-day, 9-day. We're working on a couple other courses for healthcare professionals, not really related to trading. Ableway Tech offers the Thinkorswim bundle, fully coded, a course on the adaptive systems development process combined with the Kata 2 challenge, which is the practical application. You learn our techniques for developing adaptive systems, and then you see those being applied to Griff's Kata 2, and then you end up, when you take that course, with a process for adapting any system to your needs. And then you have specific content and rules for the Kata 2 challenge. So that's a pretty powerful set right there. Bill Scheidt and Jeff Bocasio have the PRX crypto and the core adaptive courses that they're teaching. So collectively, we're continuing to add to the lineup of things that we can offer. I would also like to just draw your attention to the Ableway Tech blog, and I copied this. I think I'll be copying it to our Patreon too, but a really good discussion from Griff about the collapsing dragon, which is one of the things that they teach in that Kata Challenge course. And in that, he covers a lot of the ideas associated with the collapsing dragon, simplified on this chart, that when you have a strong move, a pullback to a measured level, that's the R10 pinch. The best way we like doing that collapsing dragon is then if you have a lower high, then your collapsing dragon is triggered on the break below the lowest low of the R10. You'll notice that this is actually a form of Kata 2 because it's not just collapsing below here, but the lower high gives you a target. So you had a successful sell and then a lower high, and now you get that second leg momentum, and that's what makes this form of the collapsing dragon extraordinarily powerful. And that's something that's taught in the Kata 2 challenge course. And here's just an example of what that looks like with actual price data. 2 leg strong move, a high, a lower high. There's your signal. That's where he hits it. Standard risk, 2R move, standard cover in a 1, 2, 3, or you could have exited here. This one could also be an SSC or a Kata 2. It's a Kata 2, if you look at this support and that support. It's an SSC if you just look at the fact that it made a 3R move off the high. That makes this really an SSC in my view. But the longer term support and up and to the right also gives it a Kata 2 flavor. And then you can see how the MACD histogram from fall to winter, briefly touching the spring, then back to winter, makes this really powerful. So the winter, spring, winter, by the way, which triggers. So even if you miss this, that's another very strong signal south. It's actually a collapsing dragon below here, and this could have even been a second position. Not crazy. And then it finds support at a place you're not allowed to be surprised that it finds support. In that course, they also cover some variations on some exit strategies. Here's one in EWW, and so he talks a little bit about how the exit strategy can give you different features. And then the justification for focusing hard on the Dow 30 Industrials and EWW Mexico as part of the Kata 2 Challenge workshop. So more on that at Ableway Tech. There's another week left of registration before they start that next course up. It's if you haven't taken it, I can highly recommend it. They've really done a nice job and have really figured out how to focus on the questions that come up from the traders from previous courses. So they've been upgrading that course as they go with insights from the Q&A session. So I just wanted to bring that to your attention. If you use, there's a $100 discount in that course that's available. Okay. That's good for another week, I believe. All right, let's jump to today was a Fed day, some remarkable follow-throughs in the afternoon. So I focused more on the old reliables today. And I didn't do all that much in the early sessions, but I was looking for what things were exploding after the Fed event. And the metals really seemed to enjoy that run up. But at the same time, I couldn't justify holding a lot of things overnight on individual company names. So we just cashed the 1R here and called it a day in Alcoa. In AI, because of that sell-off from 33 down to 28, I felt like this thing has had a chance to get restarted on a swing trade basis. So I bought this one with the standard risk, and it closed pretty well. And I'm going to hold. I'm going to hold that one overnight because I think the upside targets of the 5-day anchored VWAP, the 10-day, and the 30-day anchored VWAP give us a range of reasonable targets to the upside in the next 10 days or 30 days, however long it takes to get back there. This just feels like an extraordinary stretch, and I'm looking to recover that distance with the buyers. Caterpillar, love the company. The sell-off was protective in nature. Fed announced it broke through the PSAR, speculated in, standard risk. It closed pretty well with 3R in hand. I'm holding that one. I stayed away from Cliff and CVS. Diamonds I enjoyed because we already had one position in, and it showed no weakness at all going into the Fed. And then the Fed announced and it started to rev up its engines. So I put the second position on. Probably should have had a third position, but I'm carrying two overnight, two positions overnight. And the first position from yesterday is +6, and this one is +3. So we're holding +9, and it closed very well. So this is the one that I expect to be the most solid tomorrow. But if they start failing tomorrow, then that's the one I think will fail the slowest. So gives me some flexibility. I stayed out of Disney and Devon. Emerging markets felt like it was recovering from this 5-day sell-off, and that's a COTA 2, and then it never really looked back. And I didn't want to hold it overnight, so that gave us about 3R. Ethereum was tempting, but I'll wait to recover and to resume tomorrow. If it breaks above today's high, then I'll be in. Mexico was just a wonderful SSC right from the get-go, standard risk, and just held it for 6R and enjoyed it. And Brazil was even better. So that whole Western Hemisphere was getting it done today, about 4R there. I stayed out of Intel. IP was one that we had this move yesterday with 3 positions in that closed here. And today it opened, ran all the way up, and then right here I elected to get out. And that was a massive trade. Now it held pretty well, and I like the way it recovered, but it's so far advanced above the 5, 10, and 30 and 270-day anchored VWAPs that I wanted to wait and see a resumption of power tomorrow before I jump in. I didn't want to hold that overnight. That's, if we were to count that one up, 4, 5, 6, 7, 8, 9, 10 on this one, 7 on this one, 5 on that one. I mean, you're talking +22 or more on that trade. That's IP for crying out loud. Coca-Cola collected an R. Regional banks seem to love the Fed today. Uh, I was tempted to hold that overnight, but today's move recovered all of the sell-off from the 10-day, the 30-day, and the 5-day. This little recovery run went all the way through there. So I feel like the easier money is over, and now it's back into this solid thickness of resistance. And I'd rather just cash 4 and then bracket this tomorrow. And if it keeps going up, I'll get back in. That's fine. But if it starts failing, then there's actually room to be short on it. And I wanted to be directionally neutral on it tomorrow. McDonald's we just exited yesterday's trade for about an hour. Merck, a fraction. Microsoft. This is one after the Fed announced that I feel good about tech, and it's had a nice 4-day run. So I put the standard risk on. I was determined to hold it overnight. Marijuana, no trade. Nike, no trade. Nvidia, no trade. Clean energy was running hard, so took a couple R from that. Palantir, I like this very orderly sell-off in a speculative tech leader. This feels like bottoming price action around the 5-day VWAP. And then when it broke out of that, like on a COTA 2, I'm going to give that a try. And we're holding +2, and we'll see what we get tomorrow. No trade in Rivian or Sound, or you see the S&P really responded wildly. Tesla, I took a long, wide position on it. I'm going to hold that one overnight with an R in hand. Walmart, no trade. U.S. Steel, no trade. And XLI, this is one that I'm betting on. This was yesterday's 2 positions that closed here. Today it gapped up and started going, so I added a third. The Fed announced right here, and all this thing did was keep going. So I said, the heck with that. Let's add a 4th position. And it closed here. So I'm holding all of that. The big bet on America right there, 5. So this one is 6. This one is 4. This one is 3. This one is 2. That's +15 on 4 positions and ready to see that go. Instead of trying to find the individual companies, just betting on the industrial sector. Yeah. Quick look at the traders for tonight. Tim, nice job on IP. He sees the owl entry and then the collapse through the PSAR. He gets a short and then exits at the PSAR flip for 2.2. Really nice work. The second one in Merck, also at 1.2, he gets there's the gap down, breaks through the VWAP, PSAR flips, so he's long, gets his stop in play, and then takes a standard exit for 1.2. Jonathan, looking like a young man here in Mexico. Sees the early morning chop, but takes it anyway. He looked at that as a clear low, and you get winter, spring rising above the PSAR. So he gets it here with a standard risk, and boom, second position, all out at 10.67. That will help feed the bulldog. Notice how this is pretty good. It was still in the summertime. Um, so it didn't start getting wonky until about in here, till it comes back to the Red River. Notice once it leaves the Red River, you get that acceleration, and then it comes back to the Red River. This is where sort of cooler heads prevail. And you can see that's where it starts getting sideways and choppy. This is all joy and rapture. That's the turning point. The return to the Red River's normal, yeah, is that kind of an indication. You'd also see that that's where the Bollinger Band starts rolling over too. That's really good work. George brings 1.3 out of IP and avoids all of that shenanigans. And that's just the second leg after the Fed announces. One of the giveaways on that one was the the rising lows, and then the acceleration of the VWAP here. So that's a lot of volume being transacted, but then notice how the VWAP explodes. There was a ton of volume into IP right there. So that's really nice work from George. And then his last one gets a nice taste on XLI right in here. He noticed it, elected not to chase, but that's going to be available tomorrow too, because it's well above that previous peak, and the market put in a new price high today. So all looking pretty good. All-time high was expanded today in the 150. That's just a rocket ship and fireworks. On the 30-day look back, you can see that we've got our this is the 30 period anchored VWAP, and it has the Bollinger Band mean is caught up to it. Um, that's healthy. You've got the 5 and the 10-day right here, and this is how much further up today's price action took it. So this is a stretch. Today was a stretch away from that longer term fair value. So that's an optimistic move, closing at the high of the day at 520, and it's at an all-time high. There's no resistance overhead. So XLI, good on you, America. There was enough comfort in the rest of the globals that the global markets, emerging markets, Asia, Europe, all raised in sympathy to strengthen the US. There's a comfort in those other indexes that when people are buying the US indirectly, that's going to help the rest of the globe. So there was a good recovery in all of those as well. Hail of the tape, big time breakouts everywhere you want to look. Just notice that some financials, excuse me, did really well. Goldman Sachs had a big day. 3M in XLI did really well. And Tesla had a nice day. So nothing wrong with that. ETF tactical, Ag and DIA both 6-month new highs, as was the S&P itself. So really strong. Being dominated once more by the fall and the summer. DIA, XLF, EWW killers. Where's my XLI? Still has room. XLI is still in the fall and out of the Red River. That means there's still a lot of upside to it. Everything was happy today except for Chevron and oil. That's actually contributing to the rising of the broader indexes when energy prices are coming down. We've been saying this for about 3 weeks. Diamonds, industrials, and finance. That's what that looks like. The Dow is outperforming the S&P. JP Morgan, American Express, Goldman Sachs, those were all the biggies today in finance. Standard names at the top. Even Goldman is in that list. Let's see. Sorry. Yeah, let me just acknowledge Goldman for a minute. Strong frog number and a decent intraday range percentage. Gives you a pretty solid number to be in the 10th position. There's some tech, Apple, Intel, NVIDIA. Then our standard big three. Now, I want you to notice that the sell-off in the 90, that weakness, instead of continuing down, has started to go sideways. This failure to fail, this is still pretty strong. It has stayed out of the yellow zone, and then today's little bump could be the start of the next little run. Maybe this was the pause that refreshed. But there's room for the 10 and the 30 to recover, which would be enough for the 90 to move up as well. All right, that's everything for today. We'll get this published and posted, and we'll be ready for them tomorrow. Looking for strong follow-throughs. Take good care.